how the company is going to compute with the marginal costing statement, and also we are going to check with how the company is ascertaining the number of units they are going to sell and what would be the sales value. So how they are going to fix all these aspects. So that is what we are going to see in the today's session. So before entering into the session, I want someone to get up and recap what we have seen in the previous class.
Today's previous class we have learned about marginal cost. Marginal cost is the additional cost of producing optimal value of output. Marginal cost is equal to total cost divided by quantity.
Good morning everyone. Myself Preeti. Today I am going to talk about the marginal costing using the design thinking process in the empathize stage. So empathize is nothing but understanding the pain points and understanding the user problems in a management process. So in this stage we understand what a business needs, how much they need sold to units, and how many revenues to require the desired profits. And the main concern is the business worrying about variable cost and fixed cost to achieve the profit to current market conditions. So thank you.
The defense stage, the problem is clearly defined as determine how number of units sold and the total sales value of rupees 60,000 using marginal cost principle. In this stage, compute the contribution per unit. Contribution per unit is equal to selling price minus variable cost. Contribution is the key factor that recovering the fixed cost and generating the profit. Thank you.
Everyone, now let's see about the ideate stage in the design thinking process. So here we will develop the marginal costing solutions. So first we will the formula for finding the units to be sold is fixed expense plus desired profit divided by contribution per unit, and the next formula for finding sales is equal to fixed expense plus desired profit divided by contribution per unit into selling price per unit. Thank you.
Good morning. I'm going to tell about the prototype. It's about applying the formula and given data. So first we need to subtract the contribution per unit. Then we need to add fixed cost and desired profit. Then we need to divide by contribution per unit to required units. Then we need to multiply units by selling price to get the sales required.
Hello everyone. So here we are going to know about the number of units that need to be sold to earn a profit of rupees 1,20,000. For that the formula is the fixed expenses plus desired profit divided by contribution per unit. So for that we have to know first the contribution per unit. The formula is to find about contribution is selling price per unit minus the variable cost per unit. And selling price here is 40 and the variable cost is 25. By subtracting the value we got 15 as our contribution per unit. So here we apply the contribution value and the fixed expenses is 1,80,000 plus the desired profit is 1,20,000. By simplifying it we get the answer of 20,000. And the next one is we going to know about this. For that 1,20,000. So here the same formula into the sales price per unit. So the value is 1,80,000 plus the 1,20,000 and the same formula into the 40,000 which is the selling price per unit. And by simplifying it we got rupees 8 lakh or 7 value. Thank you.
So good morning, I am Vinga. Today I am going to summarize in today's lesson. Today we talk about the marginal costing for number of units sold to earn a profit of 1,20,000 and sales to earn a profit of 1,20,000. For number of units sold year to year, 1,20,000 is fixed expenses plus desired profit by contribution per unit. For sales to earn a profit of 1,20,000, the formula is fixed expenses plus desired profit by contribution per unit into selling price per unit. Thank you.
So students, hope like you have understood in today's class. So what we have seen in today's class? Marginal costing, decision making problem. So we have seen what is marginal costing is all about. So the additional cost which has been incurred by the company for producing the additional unit is called as a marginal costing. So this marginal costing is very helpful for the company in order to make the decision making.
So in today's class we have seen how the company is planning to produce the number of units. So that is the first scenario we have seen in today's class. So what number of units or how many units the company has to produce in order to have a desired profit. So what is the formula we have seen for the fixed expenses plus desired profit divided by contribution per unit. So with the help of this formula, the company can come to a conclusion as how many number of units or how many units they have to manufacture. So that is the first scenario. The second scenario is at what price the company has to make a sales in order to have a desired profit. So what should be their sales revenue? What should be their revenue? That is what the second case. So the formula for that is what? Fixed expenses less desired profit divided by contribution per unit into selling price per unit. So with the help of these formula, we can come to understand what should be the number